Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Today we will continue with our technical analysis on Tesla, and while we're at it, I will also add my technical analysis on Shopify and Amazon toward the end of the video. So check out the timestamp and jump to the right stock if you'd like to follow Shopify and Amazon. If you're new to my channel, here's the daily chart for Tesla. The volume today is 98%, so almost 100%, which is fairly substantial for a day that has a bullish breakout. So I would say that this bullish breakout is not necessarily a fake out. It is sustainable given the volume. As you can see that the temporary previous high for the last few weeks was about 7:30, and today Tesla touched that and ended the day on the high note of the day at 7:30 as well. This candle is a bullish breakout candle, so it's very encouraging. The next price target should be easily 735 and then 746. One other thing to note also is that the 50 days SMA, which is this white line here, and the 200 days SMA, which is this red line here, is about to cross. So once the 50 days, the white line, cross above the 200 days, the red line, then that means that Tesla has formed a golden cross, and that is a potential signal for Tesla to move higher. That is still purely just technical analysis. Of course, it's also dependent upon various fundamental and news out there. My assessment is that Tesla would potentially be upgraded by a bunch of analysts in the next few weeks, given the fact that it is producing a humanoid robot in the next few years. So that substantially changes the fundamental and the nature of Tesla for the better, in my opinion. So I do think that those upgrades could be catalysts for an additional bull run in the short term. Here's the hourly chart after Tesla has been consolidating for a good chunk of about a week after the first breakout last Monday. It continues to break out again today. So let's see how this breakout will be sustained. Let's see how sustainable this breakout is, but at the very least you can see that here's the consolidation range for Tesla. It ranges from about, on the upper end, about 718, and at the bottom end is about 704. So this between 718 and 704 has been consolidation range for Tesla from a few weeks ago, and then today it has broken out of that consolidation range. If we are looking at the 4-hour chart for a little bit of a longer term analysis, we can see that the next potential consolidation range for Tesla would be on the upper end 746, and on the lower end is about 731. So it is about to enter that zone that it previously created in April here. If for whatever reason it could surpass 746, the next price target is 768 and then 793. So that's really, really good news for Tesla if it can break above 746 in the short term, which I think it can given the volume and the momentum at this point. Let's review the price action for today. Here's the 30-minute chart. So Tesla started the day gapping up a little, but then retraced back down, closed the gap, and then spiked up above the pivot line. The pivot line for today on the upper end was 722. It spiked through that, retraced a little bit, and then progressively moving back up. So it continues to create high lows and higher high on the 30-minute chart. The trading range for tomorrow is on the upper end, 743. The middle pivot point is 724, and the bottom pivot point is 718. I hope that Tesla will be able to maintain between 725 and 735 tomorrow if it cannot get to the upper pivot point, because that is bullish continuation and it could potentially spike further the day after, which would be Wednesday. And so for now, I do think that this is a very decent range for Tesla, and Tesla has a lot of upside potential going all the way up to 793 and then 824. So let's review. On the upper end, we are having 735 as the first resistance, which Tesla could probably get there, no problem. Then you have 746, 768, 793, 824, and then 853. Once again, volume is really good. The buy volume is also very good. A lot of green bars that we can see here. So hopefully the move is sustained and that we can see some further breakout. If not tomorrow, then the day after tomorrow. A quick note for the investors out there. I know you probably don't care much for technical analysis, but you probably run out of videos to watch on other channels about Tesla news and fundamentals, so you'll opt to look at technical analysis. Just so you know, I am also an investor in Tesla. I have over 300,000 of my equity in Tesla, and I'd love to hold this stock for the next decade, especially now that I know that Tesla has a humanoid robot project. I think that the company has a lot of runway in the future. And so I do think that you could and should hold on to your shares long term and continue to accumulate when you can. Every time Tesla has any kind of retracement, I buy, whether it's 1 share, 2 shares. I have every spare penny of myself pour into Tesla. My second biggest holding is Amazon. So that is a perfect transition into my Amazon technical analysis for today. So for those of you who follow my channels, you know that I am a big fan of Amazon from an investing standpoint. Amazon is, like I said, my second biggest position in all of my portfolios. I am a big fan because of not just the business model, but I think it is currently prime for a run from a technical standpoint. So I'm sharing with you here is a weekly bull flag that has been cooking for a long time. It has been doing that since March of last year, and I think that it will continue to materialize over the next few months. So right now, the bull flag is the beige line here, with the low end of the bull flag is 28.05 and the upper end is 33.82. The first price target for this bull flag is 39.50 and the second price target is 45.51. I'm not naive to believe that this is an imminent breakout. In fact, I think it takes some time to break out. It could be months, if not another year, before Tesla can get to 45.51. But I wanted to draw this chart for a bigger picture time frame. And every time that Amazon falls, that's an opportunity to buy, at least for me, as long as it doesn't fall out of 28.05. Even if it falls out of 28.05 from a technical standpoint, as an investor, I will continue to buy up shares from Amazon. Let's get back to the daily chart. So I want to point out there is a gap that Amazon created from earnings, and that gap went from 3,600 to 33.47. So Amazon dropped from 3,600 down to 33.47 the day after earnings, and that create a very big gap. Amazon bounced a little bit and went all the way down to about 31.85, made a bottom and start spiking back up. So for those of you who knows about gaps, you know that gaps are almost always filled. The question is, when will it be filled? Right now, Amazon has getting into this gap and filling probably a little bit over 1/3 of the gap. It is slightly below 50 days SMA. 50 days SMA is this white line here, and I also make a straight dotted white line here for me to track it on smaller time frame. So 50 days SMA right now is sitting at 34.60. So Amazon could easily reach 34.60 tomorrow and potentially get above that. If Amazon gets above 34.60 and hold by the end of the day tomorrow, that is very bullish, and it is a sign that Amazon will continue to get to 3,600 within a short amount of time to close the gap from the last earnings. On the upside, Amazon has another resistance at 37.14, and then all-time high is at 37.73. I know we're still a long way there. We're probably another $350 there, but you know, Amazon, when it does run, it could run very fast and furiously, and it could get to whatever price target and knock it out pretty violently from my experience trading Amazon. The volume today for Amazon is also 98%, similar to Tesla. So it does tell me that there are bulls out there that have been buying up Amazon today, and this is not a fake breakout. With Amazon, complete reversal could happen, but usually when you see a strong day like this, I expect tomorrow to be a bullish continuation. I wouldn't be surprised if it gets to about 34.60 and stop around there, consolidate for a couple days, and then continue to go up, because 34.60 right now is a fairly important resistance. The 200 days SMA was 32.78, which Amazon spiked through that about early last week and held above that level. So you can see that Amazon first spike, the first bounce was on the 23rd of August, which was last Monday. And then the second day on the 24th, it spiked above 200 days SMA here, right here. And then it held that level for a few days before breaking out further today. So this just tells me that Amazon bulls are continuing to buy this stock despite the fact that it has been dropping. Volume today is right at 98-100% here with a lot of buy volume. So unlike in the last few weeks, it has a lot of red. The buy volume start coming in recently. One thing to be careful about is the RSI. RSI is also on the overbought territory right now. Not too overbought, but it is semi overbought, which means that tomorrow Amazon could retrace a little bit before moving further. Here's the hourly chart for Amazon. The breakout is pretty imminent after bottoming at around 31.75, and it has been consolidating for a couple days and breakout today. The trading range for tomorrow is on the upper end, 34.97 tomorrow. The mid pivot point is 34.06, and the bottom pivot point is 33.69. I think that Amazon could easily go between these two pivot points, these two upper pivot point tomorrow, and particularly it could dance around 34.60. If it spiked through 34.60, it could get to 34.97 and then retrace. So if it has a tiny gap down tomorrow, it could be a good opportunity to take a call. The first price target would be 34.60, and if there's a lot of volume, it could get to 34.97, but probably it would stop there for the day tomorrow. That is still another $70 from here. So that's still a pretty big jump based on the pivot lines here, but the pivot lines are essentially a depiction of the price action and volatility for the last 2 days. So given that today it moved pretty violently, the price range for tomorrow is clearly much bigger on the upper end of the spectrum. Let's move on to the third stock of today, that is Shopify. Shopify is a stock that I strictly day trade for the time being. I used to own Shopify when it was around 600 to 700 area. I own it to about 12 to 1300, and I think the valuation at the time was too high, so I exited my position. I don't regret, even though it is already in the 1500 now, and I don't believe the Shopify will have any major crash anytime soon, but for me, more firmly believe in Tesla and Amazon, and so I put my stock over there as opposed to with Shopify. Nothing wrong with investment in Shopify. The valuation just too rich for me, and I haven't seen any type of humanoid robot invention in order to justify that type of valuation. But having said that, Shopify is a solid company, and it is also heaven for day trader because of its volatility. So let's dive right into the daily chart here. The volume is only 57%, so compared to Amazon and Tesla, this is substantially less in volume. You can see the volume bar here. It is about 1/3 selling volume and 2/3 buying volume. RSI is on the downtrending, so there's nothing excited about Shopify here. The area highlighted here is sort of where Shopify has selling pressure. So for the last few months, every time it hit this area, it has potential to sell off. Obviously, it broke through that around end of July here, but then also retrace around that area and start consolidating around there. So I think that Shopify could consolidate around here for a few more days and then fall because the pattern does look like a head and shoulder, or it could also consolidate here for a few days and start spiking up and go back up to about 1586, in which case it would resume bullish and continue the breakout momentum. Looking at the hourly chart here, I usually, for Shopify, I usually observe the pivot lines really well, but I also draw lines for high and low of the day before. So this line right here depicts the high point of today, and this line down here depict the low point of today, which means that there's a good chance that Shopify could sell off when it get to the high point of today. It could also meet buying momentum if it gets to the low point of the day. This is sort of just a gatekeeper for me for Shopify. It is not necessarily true all the time, but it just adds into my resistance and support points. The way I trade Shopify, I learned this from one of my mentors. His name is Oscar. He's still a very prominent figure in the trading community out there if you know him, but I learned my Shopify trading through Oscar. So how I trade Shopify is that I'm looking at a couple of things. First of all, my pivot points here are my guiding principle for Shopify. I also have a line for the higher high and a line for a lower low, which is the highest point of today and the lowest point of today. So these two turquoise looking line are my guiding to track the high and low of the day before, which is today. My line right here, there is a green line here, if you can see it. That is for me to track where Shopify ends the day today. So it ends the day at 1549, give or take. So that's where my green line is. So when the market opens, I would gauge in accordance with the green line. So if Shopify has a gap up of about, say, $10, it happens to be the higher point of today price action, and it creates a $10 gap. So for sure I'll play a put for it to go down. First price target would be 1549. Second price target would be the pivot line here at 1545, and potentially the third price target could be 1531 if I have more than two put options at that point. Conversely, if Shopify opens the day with a gap down, so for example it ends the day at 1549, but it opens in the morning at 1536, 1537 or something like that, I'll take a call for it to hit the first price target is this pivot point right here, and then the second price target would be this green line right here to close the gap. It could also travel all the way back up to 1559, and if I see a lot of volume on the way up, then chances are it could also get to the top pivot point. I'm leaning a little bullish on Shopify, but I think this is sort of a 60 bullish, 40 bearish. So I'm not completely convinced that it is bullish. It is possible that it is bullish in tomorrow for sure. If it opens with a gap of about $10 to the downside, I will take a call for it to hit 1549, 1559 accordingly. If I'm lucky, it could go all the way to 1586, which was a previous strong resistance. But I think for now, all I want is for it to get to above 1560 to have any hope of a potential new bull run. If it does have a potentially new bull run, it could get to above 1650 pretty easily. So that's where I'm at with Shopify. Shopify, I gotta say, it is not for the faint of heart. It moves very swiftly, and you really have to pay attention, and you have to calculate the risk versus reward properly. Usually on Monday and Tuesday, premium for the weekly options are really high. So I don't participate in Shopify necessarily on particularly Monday. For Tuesday, I really have to see a good setup to trade. Friday, I trade Shopify all day long. So I have a lot of experience with day trading Shopify. If you're interested, I'd love to share with you a little bit more in the next couple of videos. But for now, I think a gap trade, if you execute well, it could be very profitable in the long run. Don't forget, this pattern looks very much like a head and shoulder on the daily, but I'm not so quick to say that Shopify will fall either. So we'll have to wait and see for the next couple of days. Once again, I lean bullish, but anything can happen in the next couple of days. So that is it for this video. I hope you enjoy the 3 stock series that I put together: Tesla, Amazon, and Shopify. I love trading these 3 stocks. With Shopify is my strict day trade only. Amazon and Tesla are both my holdings as an investor as well as day trading.